Hello, everyone. I'm Alexander Theo Harris.
And I'm Peter Smith. Thanks for having me.
It's your podcast, too.
Good.
All right, we're going to be talking today about a topic that comes through the door basically every day. This is probably the biggest thing that we deal with here at this law firm is people asking this question. And that question is...
What entity type should I choose?
Okay, there's a couple things we're not going to be chatting about today. And for starters, last time around we talked about social purpose corporations. We're not going to be drilling in too much on those today. We're also not going to be getting too much into vesting or securities. Those are going to be topics that we'll cover in a future podcast.
So the idea with today's discussion is what corporate entity, why should I even have a corporate entity, A, and B, what corporate entity should I choose? And we'll talk a little bit about the pros and cons of the different entity types. Mostly we're going to cover LLCs and corporations. Those are the two biggest that we help with for-profit entrepreneurs. But we'll touch on partnerships as well. Before we get too deep in, though, Alexander, I do want to say to our listeners that this is a podcast for general educational purposes only, and that no legal advice is being broadcast today. So nobody should use this for their specific individual purposes. Please consult an attorney for that.
Correct. Peter and I are both attorneys, but we're not your attorneys. So if you want legal counsel, go find competent legal counsel in an area near you.
Well said. Okay, so what is a corporate entity, Alexander?
So a corporate entity is this legal fiction, this concept that we are creating a new person under the eyes of the law. And this new person has many rights that a normal human would have, but they don't have any of the downsides. They don't have to eat or drink or sleep.
Or die.
Or die. They can die if they so choose, or if the state chooses, but they don't have to die.
That's right. Perpetual existence.
Unlike people. So it has a lot of cool features to it. It is, of course, a legal fiction. It is this idea that we can create this form that has its own rights. And there's a bunch of reasons to do it. The biggest reason, and the reason that most often people come through the door and ask us, hey, I want to start a company, is because they want to reduce their liability. So when you are a normal person acting out in the world, everything you do is basically incurring liability. If you hit somebody with your car, if you serve poisoned food, if you, I don't know, let's say you develop some sort of new tech, some Bitcoin or Litecoin or Ethereum tech, and lo and behold, something is wrong with the code and everybody loses a ton of money. If you have a corporate entity, it's actually the corporate entity that's liable, not you personally, in most circumstances.
So the point really at the end of the day is that you are not your business, right? Your personal assets shouldn't be at risk for a business and its liabilities and risks out there in the world. It's a chance to separate yourself from your business. And this is crucial in American corporate history, right? This is what's made a lot of wealth in America because businesses fail. So the idea is that you are not your business. You should be separate and distinct from your business. A lot of people will say this about business. Business is synonymous with risk. It's an important part of American corporate history and American capitalism to take risks, to take that opportunity and chance to fail. But you don't want to have your house, your car, your personal assets at risk for something your business is doing. Again, you are not your business. So separate yourself from your business. And how you do that is through a corporate entity. You know, some other reasons why we might want to do this, Alexander, that we've seen include public perception, right?
Yeah, we have a lot of people who come through the door and say, hey, I want to be a business so that people take me seriously. Maybe they've already been running for a while. Maybe they have a coffee roastery or a tech company or something that they've been working on out of their home. But they want that legitimacy that comes with having the LLC at the end of the name or the Inc. at the end of the name or the co at the end of the name.
Right, and especially if you're going to try to attract capital, whether from a bank or from investors, having that the corporate formality, having an actual entity, again, separate from yourself, is a big step towards having a good public perception. And that leads me to another reason why having a corporate entity makes a lot of sense, because it's a way to organize the management, right, the board of directors potentially, or the LLC managers, and the capital that comes into the company.
Exactly. So there are a few different types of entities, and we're going to go through those now so you can get a sense of what is actually out there. There are a few we aren't going to touch on, but we are going to walk through the main ones. The first one, and the one that most people probably start with if they haven't gone and chatted with a lawyer, is a partnership. A partnership is you and somebody else have decided, you or maybe potentially many somebody else's, have decided to band together and do some joint venture, some business enterprise that you all want to work on together. Partnerships are great in that they're really easy to set up. It's very simple for you to just say, we're all in this together, here we go. The downside is it comes with a ton of liability for everybody in the partnership. So one of the first things we do when somebody walks through the door is get them off of a partnership. We see this a lot. Folks come in, they're pretty excited, everything was rosy when they started up, but lo and behold, without some structure and some limitations on what people are actually allowed to do in that partnership, things can go sour pretty quickly.
So let me make this a little bit scarier, because I think Alexander's holding back a little bit on this one. Imagine that you start a partnership with your best friend Tom. Things might be going great and rosy, but without the legal entity structure, you're personally liable for whatever Tom does. Tom might be your best friend, he might be great, but you do know that he is a little bit gregarious and could potentially promise things above and beyond what your partnership might be able to offer, right? You're liable for that, congratulations. Personally liable. Remember, your personal assets are at risk until you form a legal entity.
And it's actually even worse than that.
Oh no.
It could be that you tell your friend Greg, hey Greg, make sure not to enter that business deal with that other entity, XYZ Corp. When you go talk to XYZ Corp, do not sign a contract. I am expressly prohibiting you, Greg, from signing a contract. And Greg goes there and lo and behold, signs a contract.
Uh-oh.
You told him not to. You were very clear. In fact, you put it in writing. You said, Greg, you're not allowed to do this. And Greg did it anyway. Are you liable?
Absolutely. Unfortunately, Greg had all the apparent authority in the world to sign that contract on behalf of your partnership. So congratulations, you've now got a personal liability to make sure you follow through with the contract you never wanted to enter into in the first place.
Maybe he took out a massive loan. You told him not to. You said, do not do this. And he still did it. You're still liable. Partnerships are really scary in that regard. You are giving somebody else a ton of power to be able to basically throw your money around and make you liable.
So I think listeners are probably sufficiently scared about the partnership aspect. So let's talk about actually forming a legal entity that's separate from you under the eyes of the law. When we conceptualize the different entity types that you can form, I envision it like a spectrum. I'm going to go ahead and hold my hands out now, my left hand out and my right hand out. And on the left-hand side, you can think of, on the spectrum, the least amount of formality you can possibly form. And those would be formal entity partnerships, okay? Limited liability partnership or some other limited partnership, okay? And on the right-hand side, so way over here, if you're holding your right hand out.
To paint this picture, Pete's arm is way far out there.
It's sort of like, how big is this fish? This fish that I caught was this big? Right. Well, anyway, way out on the right-hand side is a corporate entity, which has got a lot of formality, okay? It's a creature of statute, and the statute prescribes exactly how the corporation is going to act. There's ways to alter that, okay? But the typical way is that shareholders are the equity owners in the corporation. Their rights are to elect the board of directors, and the board is the ultimate governing, managing body of that corporation, right? But then the board is supposed to delegate its authority to officers. That's how you get the president, the CEO, the CFO, and a number of other officer positions. But there's this formal structure, right? There's supposed to be an annual shareholders meeting, and it's a little bit more rigid on the right-hand side. On the left-hand side, like I mentioned, the partnership, that's just a creature of contract. The way they work is what you put in a document to agree to do amongst the owners of the partnership, the limited liability partnership or the LP.
So it gives you a lot of flexibility.
A ton of flexibility. Well, right. There's much less formalities involved for the corporate structure. And then right in the middle, we have this relatively new entity type that's called the LLC. I say relatively new because, it's only been around for maybe 30, 40 years versus corporations, which have been around for hundreds. And the LLC is sort of a hybrid between the two. There's some statutory backdrops that prescribe how LLCs act. But ultimately, a lot of those can be amended in a written document called the operating agreement or the limited liability company agreement between the members of the LLC. And they can sort of write out how they want their relationship to be.
So you could really choose to put anything into that LLC operating agreement with some minor exceptions. You could really put in anything to help govern the way you want to do business. If you want to have a 50-50 structure and a tie-breaking mechanic between the two, that is, we go talk to a third person, that's fine. If you want to have a coin flip, that's fine. If you want to have, if it was raining that morning, we go this way versus that way. All of that is totally acceptable and can be written into that operating agreement.
Yeah, the idea is that it can actually look very much like the limited liability partnership or a partnership we talked about. Or you can go the other way and have that operating agreement be, 50 pages long and establish a robust management board with members electing people to the manager positions and make it actually look a lot like a corporation. I'm going to take a quick segue here and talk about tax as well, because the different entity types come with different tax implications. Partnerships are taxed as partnerships with the IRS, okay? LLCs are pass-through entities with the IRS. They sort of ignore the entity and pierce it and tax the LLC either as a sole proprietorship if there's only one person in the LLC, and yes, you can have a sole member LLC, or they'll tax it as a partnership if there's more than one person. Now, the beauty of the LLC is that it can elect to be taxed as either an S corporation or a C corporation with the IRS. Pretty flexible in that regard too.
So why would someone want to do that, Peter?
There's a number of reasons, but for the sake of the podcast, the basic reason why you'd want to have an LLC not be taxed as a partnership is at some point, the income that you're generating in the LLC, I tell a lot of clients it's between 70, 80, 90,000. You should probably talk to a CPA about this. But if you're able to pay yourself something in the order of 70, 80, $90,000 and there's extra after that, as an X corporation, you can couch all of that income as an expense for the business, and the additional capital that's in there over and above that is not taxed to you as income, but at a corporate tax rate, which can potentially be more beneficial. You avoid the FICA and other self-employment tax.
And that's really a good discussion to have with a CPA.
Yes. And then just to finish the tax conversation, on the far right-hand side, over on that formality side, corporations are taxed as C corporations, which is a tax designation with the IRS, the default, or they can elect to be taxed as an S corporation, which is a flow-through to the corporate holders, okay? C corporations are taxed at the corporate level, and then again, when any dividends or income flows through to the equity holders.
Now, obviously, there's some differences in the taxation side, but I think the single biggest thing that helps determine what somebody should be is how they're taking in money. If they are taking in funds from investment versus personal funds versus having just a cash flow positive business, the way that your business is structured should largely reflect how you're taking in money. And I say that because if you're taking in outside investment, typically we've found that investors are expecting you to be a corporation. They expect the corporate formality that comes with you having a corporation set up. And if they are looking at something like an LLC, we've found that they tend to expect you to change it before they'll actually throw in funds.
Yeah, I think there's good reason for that from the investor side. You know, we talked about the formality of a corporation, and that's really what investors are looking for, right? They want to know that all of their investments are going to be treated with in at least a similar way, that they're a shareholder with the rights to elect a board, and then the board will govern the company. And there's just expectations that they can count on almost for the formality of a corporation. Let's talk about the LLC. Remember, every single one can be different. And that's, if you're an investor, it's troubling. You don't want different, you want same.
So you could set it up to be very similar to a corporation in its rules,
could.
But it's still, you had to set it up that way versus it started that way.
And we've seen investments into LLCs, and we've seen LLCs be a useful investment vehicle for a number of reasons, but it's just more typical if outside capital is what you need to, produce the MVP or to get your business to where you need it to go in the first 3 or 5 years. We recommend a corporation more often than not.
Mm-hmm. Now, the benefit of the LLC is that since it does have the lesser formality to it, it's quicker to set up. It's a little simpler. It's more cost-effective to set up initially compared to a corporation.
That's right, yeah. The governing documents are a little bit lighter, or can be a lot lighter, actually.
The other thing is that a corporation has higher ongoing administrative costs. LLCs can be very flexible and informal, whereas corporations, there's a lot of additional documentation that can add to the costs.
Right. So you have at least 3 players that have to be involved with every corporation: shareholders, a board of directors, and officers. And each of those 3 positions could be the same person, right, Alexander? You could have the sole shareholder be the sole board member who's the sole officer. But the point is that you have to document that. And so when you get to those 3 different levels, I mean, that's a lot more administration. In addition, technically, corporations are supposed to hold an annual meeting every year to elect their board members. That's something that should happen each year.
So we should probably touch on what happens if you don't do all those corporate formalities. Is there a downside to just being lax about it?
There is. Why would you want to form a corporate entity in the first place? To separate yourself from your business. The rule in the law is simple. A court will treat you as separate and distinct from your corporation if you're treating yourself as separate and distinct from the corporation. And how do you prove that you're treating yourself as separate and distinct? Well, you follow the corporate formalities. You're holding that annual shareholders meeting if you're a corporation. You go and get a separate bank account for the corporation, right? If you're commingling your personal account with the business account, that's a problem. And you get liability insurance is also another huge factor that courts will look at to determine if they should uphold this legal fiction that we've been talking about this entire time. Special note on sole member LLCs and sole corporations. It is harder to make yourself separate and distinct in that situation, right? Because you are your company in a lot of ways. So for those entrepreneurs, we take special care to have them get separate liability insurance, because that is a huge way to prove to the outside world that this is different from yourself. You get the insurance in the company's name, right? And then additionally, you gotta make sure you're signing the right way. You always would sign contracts in the name of the entity to tell the outside world, it's not me you're dealing with, it's Alexander and Peter LLC you're dealing with.
And sometimes companies aren't going to accept that, right? If you try to sign as your company that has no assets and was formed yesterday, sometimes they're going to say, yeah, that's fine, but we also want you on this document personally as well. So particularly for things like loans or financial transactions, you're going to find that a lot of the time, until you have an established base, they still want that personal guarantee on top of it, so you don't even get the liability protection.
That's right.
It's probably a topic for another day.
Yeah.
I do want to mention that, so if you are choosing to go the corporate route versus an LLC with those additional formalities, if you're not upholding those additional formalities, you lose all the protections of the corporation.
Right.
So there is some real tangible benefit in going with something that's administratively simpler, because it's easier to maintain that corporate shield.
Yeah, and this is an interesting discussion point, and actually some legal minds differ on this, because if you take an entrepreneur who's out there trying to make their business run, but they're a little bit administratively lazy, let's say, then giving them less administration in an LLC might not be so good for them, because then they won't take the time to treat it as separate from themselves. Whereas that same person might see the formalities of a corporation as being a little bit more serious, and they'll understand that, hey, I got to take this more seriously. It might be good for them, in other words, to have more formality.
So whenever Peter and I form a company for a client, we give them the laundry list of things that they should be doing. And it includes things like setting up a bank account, getting insurance, making sure you sign appropriately. All those things are spelled out, because that really is important. That is part of this. If you don't treat it separate, you don't get the benefits.
Would it ever make sense not to form an entity?
Yeah, obviously there's some cost to starting an entity, right? There's all the filing fees, the administration, the upkeep.
For example, in Washington State, it's about $200 to form an LLC, and you have to pay that each year to maintain the corporate formality.
So if you're not doing something that requires that liability shield or benefits from the tax differences, then potentially, no, you don't need to do that. You don't need to have an entity to be able to do business, right? You could just set up a lemonade stand or sell things online and do it personally. The issue is that you're going to have that liability and you're not going to get the tax benefit.
I've actually advised some folks to be sole proprietorships in the past. These are people who are running really small businesses, obviously, but also in the professional trades where, for example, as an attorney, I can't use a corporation to shield myself from giving advice to people. I am always liable for the advice I give, okay? You're also always going to be liable.
Which is why this isn't legal advice.
Right. You're always going to be liable if you are, for example, the one who is working on somebody's car, right? And you're fixing the car, and if something breaks, you're personally liable, and your company would be liable as well. But if you can never get rid of that personal liability because you're always taking the actions, let's say you're a psychotherapist, right? And you're only seeing patients yourself, then a sole proprietorship is actually something it's a consideration.
One of the biggest things that is a benefit of having a corporation or another separate entity, something separate from yourself that we haven't touched on, though, is the ability to sell your business, right? If you're a sole proprietorship, you're not able to actually transfer those assets to someone else. If you're a corporation, an LLC, there's a way for that entity to be moved to somebody else.
You are not your business, are you?
You're not your business.
Yeah.
More importantly, you're not your business, so if you pass away, your business can continue living, because again, it's that separate living, quote-unquote, person. So if you ever want to sell, if you ever want to transfer your business to somebody else, so you've run your wood shop for 50 years, you've had a good run, it's time to finally retire to your log cabin, which you probably built using all those woodshop skills.
Yep, perfect.
You want to transfer it to somebody else. And that opportunity is only available if you're able to actually show that these assets belong to somebody else, and you can package them up and move them over in a simple way.
An entity. The nice, neat package of selling, giving.
Yep, that's what they call it.
Estate planning.
A lot of the textbooks refer to that exactly. The nice, neat package of selling. So where do you incorporate, Peter? Obviously, if I'm working in this state, I should incorporate here, right?
Depends, Alexander, which is why that's such an excellent question. Choosing the state of incorporation involves myriad considerations that we can talk about over an entire podcast itself, but briefly I'll touch on a few. First, Washington State's a pretty transparent state. It's easy to understand who owns the business. For some reason or another, you may not want people to know who owns your business. So a number of states, including Nevada and Delaware, they are less transparent. Okay, it's one consideration. In addition, Delaware has a very robust set of corporate law, so a lot of investors would prefer and feel more comfortable forming in Delaware and relying on Delaware jurisprudence for the internal disputes that might happen between shareholders and board management. They also have what's called the Chancery Court. There's a specific court to handle business disputes, right? Which is a huge benefit because, if you think about Washington, our judges, they could hear a criminal law case on Tuesday and a business dispute on Wednesday, right? Whereas in Delaware, that Chancery Court is only hearing business disputes all the time just for that.
Well, hang on, Peter. I've never been to Delaware. I'm not doing any business in Delaware. Am I still able to make a Delaware business?
Absolutely, you can make a Delaware business.
They'll still take my money?
They will absolutely happily they'll take your money. And in exchange, you get to say to your internal organization, right? So those are the shareholders and the board and the relationships therein, to say that Delaware law is going to govern our relationships. You would still have to pay Washington State, though, unfortunately.
Even if I'm a Delaware company?
Oh, for the right and pleasure to do business in Washington State, good sir, you've got to pay the Washington State government. So you'd qualify. It's called qualifying a foreign business, and you'd have to qualify to do business in Washington. But wait, it gets better. You actually have to qualify your business in every state where you're actually doing business.
So is it cheaper to form it in Delaware and then just qualify it here?
No, it's not. If you're only going to do business in Washington, it's a strong consideration to just form the Washington company and do business in Washington. Especially if you're forming an LLC, you don't expect outside capital to come in. That's not a bad consideration. In fact, Washington State's got some amazing corporate entities, and we have decent and robust corporate law, and we rely on Delaware law as well. So the reality is that forming in the state where you're at is a strong consideration.
So obviously there's some considerations to be had as far as where you should form and what you should form. Hopefully this podcast has helped kind of paint you in the right direction. But if you do want that real advice, it really is specific to your individual business and your individual needs. You're strongly recommended to go talk to an attorney.
Alexander, how do you feel about LegalZoom and other online tools to run your business?
Oh, it's a great question. We actually get this a lot as well. People asking, hey, either I already formed my business using LegalZoom or Rocket Lawyer or one of the other ones out there.
Right.
Or I'm thinking of doing it. Should I? The answer is maybe. It's not the worst thing in the world to use one of those online tools. You just have to understand what it is. If you're going and talking to a lawyer, you're getting personal advice that actually fits your needs. If you're using something like Rocket Lawyer or LegalZoom, or there's many others out there, and I have no qualms in promoting them because they do work for some people. If you just need the bare bones, I need to be up and running right now, that could work pretty well for you. But you have to understand that it's not going to prevent you from going to talk to a lawyer later. You're going to need to chat with somebody to get personal attention for the things that actually matter to you. LegalZoom and others are going to provide you a cookie cutter set of documents that may or may not apply to your business. And the next time that something comes up and you have to go actually talk to a lawyer, when you grow or when you need to change something or sell your business or what have you, one of the first things they're going to have to do is go through and fix a bunch of things, make things more robust, change things. And you're not really avoiding that cost. In fact, in some cases, you're increasing your costs down the line because some of that stuff needs to be redone. It's not a bad solution, but understand what you're getting. What you're getting is a very bare bones thing that's useful today, but probably isn't going to be useful tomorrow.
I think a good analogy might be that, if you go to McDonald's, you know what you're going to get, right? The McDonald's cheeseburger hasn't changed in 100 years. And it's a great burger, and and I take my kids there or whatever. I mean, it's the right thing for some people some of the time. However, sometimes you need to go sit down at a diner, and you want to see a wait staff come to you, have a waitress actually or a waiter actually bring you something. You want a little bit of a better burger. And I think being able to pick up a phone and call your attorney who actually drafted the documents can be huge.
I can't think of the last time that there wasn't something custom that somebody needed when they come and talk to us about a formation. Even for the simplest, simple formations.
Yeah.
Everybody always needs.
The price difference we're talking about is maybe a couple $100 in some cases. Sometimes it's a lot more, but maybe it's just a few $100. And for that change, sit down at the diner. It just depends on what you want to put and what your cost benefit analysis is for this particular business.
So those services aren't bad. They're just something very narrow. So Peter and I offer a free 1-hour consultation. And sometimes people come in and we tell them, hey, listen, you don't need us, period. If you want to go do this, go find an online service to spin up, or we point them in the right direction for getting some of those things done. Not everybody does need a lawyer, but you don't know until you've talked to a lawyer. So use the free consultations that are available in your area. go chat with somebody. There's so much more information. There's so much more background that needs to be dug out that we couldn't cover in this relatively short podcast. There's a lot of stuff out there, and there's a lot of considerations.
Good. I have one final plug, though, Alexander, if I can make it.
Oh, what's that?
Don't download documents from Google.
Oh, God, no, please don't. Okay, so we see this a lot. We see this a lot, actually, not even for formations so much as for other documents. I see it a lot for service agreements, license agreements, leases sometimes. I see it for terms of service and privacy policies all the time. The number of times somebody has handed me a privacy policy and said, hey, can you look at this? And it still has whatever company they stole it from.
Oh.
Just in there. Oh,
yeah.
Man.
I'll see your company in there and raise you one further. In partnership disputes, I have people who said, oh, we formed our company online and downloaded a partnership agreement. Oh, really? I'll go look at the partnership agreement, and for their Washington LLC, it says, governing law shall be California. All disputes shall be handled in California. And oftentimes I look at them and say, you guys have a dispute between each other? Why don't you go sue each other in California? Good luck. Seriously, though, do not download documents from Google and try to work them.
Exactly. Yeah, there's no easy way out for that. You can really, really do yourself a lot of harm just by grabbing stuff online. Everything that's in there is in there for a reason. And the problem is you can read the stuff that's in there and say, oh, yeah, this makes sense. This is what I want. But you don't know all the stuff that's missing, that didn't make it into that random document you found, and all the things that need to be in there.
The unknown unknowns.
Mm-hmm.
I think, and the last thing I'll say is, your business needs to be healthy, and just like a good doctor, an ounce of prevention is worth a pound of cure.
All right, I'm Alexander Theo Harris.
And I'm Peter Smith.
Thanks for listening. We'll talk to you next time.